4 days ago, we spoke about the danger zone for a pre-halving retrace, and now Bitcoin is pulling back right on schedule. We're going to be talking about this pre-halving retrace in a lot more detail in today's video, so subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. This is now an 11% pullback that we're seeing, and Bitcoin is pulling back right on schedule. The danger zone is right here, and Bitcoin pulling back 11% is very much in line with history, and based on how Bitcoin has accelerated in its cycle, breaking to new all-time highs, it's still following through on history. And if you guys remember, we were expecting the pre-halving rally phase to occur 60 days before the halving, because this is historically what has happened in the past. But if you notice here, Bitcoin broke out a few days before that point. So even though history repeated, there was only a handful of days of acceleration. And you can see here that Bitcoin pulled back a few days ago. So we're also seeing a bit of acceleration even in the pre-halving retrace. So a bit ahead of schedule with the pre-halving retrace, and a bit ahead of schedule with the pre-halving rally, but nonetheless we're seeing these phases play out, and history never picture perfect repeats but often rhymes, and we're seeing that right here right now. This is approximately 30 days before the halving, and we're pulling back right now. In 2020 we saw a 20% pullback approximately 14 days before the halving. In 2016, approximately 28 days before the halving, we saw a pre-halving retrace of 29% take place, up to 40% if you're taking into account this downside wick. And in 2020, this 20% retrace lasted only a few days, but preceded a 150-day reaccumulation period. But here in 2016, we saw the pre-halving retrace peak 28 days before the halving, and approximately 28 days after the halving, we saw it bottom. In fact, 28 days after the halving, we'd already bottomed in this reaccumulation range if you're taking into account just the candle bodies. Or if you're taking into account the downside wick, you can still see this mirroring of 28 days before the halving, a peak in 2016, and 28 days after the halving, a bottom in this reaccumulation range. So notice how the post-halving bottom, following through that pre-halving retrace, we develop a range low for that reaccumulation range, and this is the best moment for dollar cost averaging and bargain buying, because it's one of the last bargain buying opportunities for Bitcoin before it rallies into parabolic upside. So this pre-halving rally, the bottom of it develops at the bottom of this reaccumulation range, and we'll be talking about this reaccumulation range in a lot of detail in the next few videos. But we're seeing that Bitcoin is in this danger zone and it's already pulling back. But the thing about this is that we need to understand that once we see Bitcoin break beyond old all-time highs, there is a period of time that Bitcoin spends beyond these old all-time highs before it finally peaks. In 2013, 266 days. In 2017, 280 days, 315 days in the 2021 cycle. So that essentially gives us a November, December bull market peak if history repeats. Notice there is lengthening across these time periods, so maybe we even push the can down the road into December or even January 2025. But the point here is that around old all-time highs, we rarely see a very easy break to new all-time highs and price discovery. Especially in 2017, you can see that there's lots of upside and downside volatility around old all-time highs. Only in 2013 we saw a retest and then price acceleration. What we're seeing right now is a period of pulling back, stagnation, reaccumulation, just like we saw in 2017 and 2021. Maybe it gets as volatile as 2017. We'll see. but still this is just reaccumulation before price expansion towards the upside, price expansion towards the upside, and price expansion towards the upside. So no need to worry. This pre-halving retrace is really interesting because it's occurring at the same point in the cycle where we tend to see volatility around old all-time highs. So there is confluence in that respect. So at the same time, with the halving being in April, around mid-April, in fact, it also ties in with not only the pre-halving retrace, where we see retracement before the halving, but also the highest hype for altcoins before they begin their corrective legs towards the downside, because we see a lot of inflation in the market. We see lots of buying and altcoins rallying towards the upside until we get to the end of quarter one, where we start to see tapering off in these altcoins and then sell-offs. So the fact that a pre-halving retrace is occurring at the same time as this altcoin market peaking and slowing down and slowly selling off, lots of confluence there as well. But really important to notice how it's after, or at least around the halving, where we see volatility and those last moments for pulling back, but it's after the halving where we see rallying towards new all-time highs. Every single time after the halving, we see post-halving acceleration into parabolic upside. So the fact that we're seeing one of these last bargain buying opportunities for Bitcoin in the pre-halving period before it finally embarks on its parabolic upside, it's an opportunity to really take advantage of. And we are in the danger zone for this pre-halving retrace occurring, but we have to note that this is the last pre-halving retrace before we maybe reaccumulate and transition into the post-halving reaccumulation period. This is a period where we transition into a sideways range for multiple weeks. So that's a phase that lies ahead, but right now we're already transitioning away from the pre-halving rally phase and slowly transitioning into the last pre-halving retrace phase, where after a spectacular amount of upside in this pre-halving rally phase, as we tend to see across cycles, it's time for that pre-halving retrace. It's time for that corrective period, for things to cool down, for people to panic sell, for the halving to occur, for traders and speculators to get washed out of the market before we're finally ready to reaccumulate a bit, whether it's going to be 150 days like it was back here in 2020. Maybe it's going to be a shorter reaccumulation phase given how accelerated this cycle is, but we've accelerated in the cycle by 260 days. So if we pull back for a while and then reaccumulate for a while, that's going to resynchronize this accelerated cycle with the historical halving cycles that we've seen occur in the past. So very interesting to see a lot of confluence with this pre-halving retrace, with the altcoin hype cycles, with the fact that we're around this old all-time high historical trouble area that always gives Bitcoin grief before finally breaking out into fantastic upside. We're seeing a lot of confluence in the market for that. So this danger zone is called a danger zone for pullbacks, but it is a last pre-halving retrace. It is a bargain buying opportunity for long-term investors. It's essentially these two phases here. Those are the last bargain buying opportunities before the post-halving parabolic upside. These two phases are the best opportunities remaining in this bull market. And with that being said, that's about it for today's video. Thank you so much for watching. Like this video and subscribe to the channel for more videos like this in the future. Like this video if you enjoyed this content and would like to see more content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.